So welcome back. Thanks for joining us. I hope you've enjoyed all the information you've seen so far. So today we are with one of our very special guests, because in spite of the years that we've worked together, this is the first time we've actually seen each other face to face in person. And this is before COVID. So COVID had nothing to do with the fact that we had not seen each other face to face. It's just we stay busy, but we work well together in spite of. I'm going to turn it over to her. I'll let her introduce herself, and then we'll go from there and talk about some credit things. So again, I'm Edna, Keller Williams Realtor, and here is my special guest.
Hi everyone, I'm Julie Krumholtz with Superior National Bank. I'm a mortgage banker, so kind of help Edna's clients get pre-approved and get to the closing table. That's what we do.
And she does it well. I will tell you, when it's in her hands, I have no questions, no concerns, no doubts that whatever she says she's going to do, she does. And whatever she promises, she delivers that and then some. So always a pleasure to turn my clients over to her. They're always comfortable, they're always happy, and they always understand. So today we're going to talk about credit, what you should and should not do when you're thinking about refinancing or buying a home, because unfortunately we all have an idea of what we think we should do. However, the expert knows what you should and should not do. So let's turn it over to Julie. Let's talk about that process when you begin to even think about wanting to buy or refinance.
Well, the first thing I'm going to say is no credit is not good credit. A lot of people are still under that impression, especially some older people that haven't purchased or refinanced in a long period of time. You really need to show you can pay your bills on time. When you pay cash, that doesn't show you can pay a bill as you receive it in the mail. So that's the very first thing I'll say is have established credit. And for those people that aren't able to get a credit card, maybe because they haven't established credit, a great way to start doing that is getting a secured credit card. So through your bank, through your credit union, there are some online sources that you can use. But basically what they do is they hold so much of your assets in your personal account, you pay back a loan, but it gets reported to the credit bureaus. So that's a great way for the people or clients who have no credit and can't get a credit card because they don't have a credit history. So that's a good way to start.
Question, trade lines. And what does that mean, and can that help?
Trade lines, yes. Typically, most programs require 3 trade lines of credit with a 12-month history. That's how they know that you're paying on time. Some programs allow for alternate credit, and what that might be is you provide us proof that you've made your utility bills or your cable bills or your car insurance monthly payments, gym membership. You've paid all those things on time, but you document those through that particular company. I will say that I've had great luck with Experian Boost. I don't know if a lot of people have heard about that, but it's just experianboost.com. And you can self-report trade lines of credit to the credit bureau.
Never heard of it.
Yeah, it only is for Experian, obviously, because it's an Experian thing. And what they do is you go on, you create an account. They document your bank account information. So I always tell people, yes, they're asking for your bank account. It's legit, but that's how they show and verify that you've paid those bills. And the nice thing about that is it's immediate. So if you do that today, it's on your credit report, typically within 24 to 48 hours. It's not like paying off a bill and having to wait 30 days for it to update.
Wow.
So it's only self-reporting. So anything you pay monthly, utility bills, gym membership, I've had people do Netflix. So anything you pay monthly through your bank account, you can add as trade lines.
So that's huge.
It is big. It's really
big. That's
big.
Huge. Experian Boost. I don't know why I've not heard of that. Is that new?
No, it's been around for a while. And at first I was really leery when I was kind of doing some research on it. But we use 3 scores when we look at mortgage underwriting. So Experian, TransUnion, and Equifax, which are not your Credit Karma scores, which is another myth. Don't look at Credit Karma. That's not your true mortgage score. And we throw the high and the low out and use the middle score. So if you can boost that Experian score, sometimes that gets you to being the middle score. Or sometimes that is your lowest score, but that's the minimum score that you need. So it's a great reference.
Whoa, That's huge.
Yes, it is. It's very good.
That's huge. Oh, wow. I'm going to tell everybody.
I always tell my people who just need a little more credit,
Okay.
or, maybe their experience score is a little bit low, but we can jump it a little bit to get it to the middle score.
Okay.
Great tool.
Okay. Wow.
And I don't even work for Experian.
Wow. Okay, that's mind blowing right there. I'm done. I'm done for the rest of the day. Because now I'm going to go obsessively research it. I'm pretty sure of it. But,
Yeah.
And I'm going to tell everybody that I know, because that's actually, credit is your credit score. It does so much more than just allow you to be able to purchase a home or a car. Or get a credit card. Your insurance is tied to
car
it now.
insurance, yeah.
Which I absolutely positively hate. And I don't think it's fair. I think it's the worst thing they've ever done. But your home and auto insurance is also tied to your credit score. I don't think it's indicative of people and their ability to file claims at all. But somehow the governor, back when they allowed it, thought it was okay.
I agree.
So it affects so much. But I think more people now are more mindful. I have more of my clients that are more mindful of credit score and the importance of that. And it just does something to your personal psyche. One of my clients and I started a race last year. And she said, well, let's see who can get to 800, the quickest. And unfortunately, my name is co-signed on other people's things. So not all that stuff that's out there is mine. But when you pull credit, it looks like it's mine.
Right.
And I keep forgetting about that. So I was stuck at 787 ceiling. It would go 787, 781, 787, 781. And she, bing, in months, she must have used Experian Boost. Now that I think about it.
She may have.
And didn't tell me. But she got over 8 with no problems at all. And I thought, oh my God. So I've been I watch it every month. And I hit the ceiling this year. Actually, last month, I got my thing because my bank always just sends it to me. And I said, what? I did it. Yeah. Yeah. So because someone that I am co-signed on something for actually paid it off.
There you go.
So that took off thousands of dollars from my debt. That's actually not my debt.
Right. And that brings up another good point, too. When you want to co-sign and help a family member, you're 100% liable for that debt. So if they miss a payment, it's on your credit report. And a lot of people will say, but I only co-signed. Correct, you co-signed guaranteeing that other person. So if you're getting ready to purchase a home or refinance or make any other large purchase, really think about your situation and is that going to help? A lot of people say, I'm just going to have mom or dad add me as an authorized user on that account so it builds my credit. Yes, it shows on your credit. Yes, it shows as an authorized user, but if you only have authorized users accounts, underwriting looks at that and says, well, they're not liable for any of these payments and probably aren't making them, so show me that they can pay some bills. So that's two good things, authorized user and co-signers. Just you really need your own established credit.
And the other thing, now that you mentioned that, student loan debt and student loan debt that's deferred and how that still actually counts.
Yes. And topics for another day when we get into loan programs, but every program looks at it differently. A lot of first-time buyers are FHA buyers just because of their down payment, where their credit score might be at, because of debt ratio, which FHA allows a little bit higher. Even if your payments are deferred, they're in forbearance. Currently, as of today, FHA counts 0.5% of your outstanding balance as a monthly payment. So when I'm having a conversation with people and starting to pre-approve them or see what they're going to qualify for before we get into any credit or income documentation, I'll say, do you have car payments? Do you have credit cards? Nope, that's it. Do you have any student loans? They're deferred. Well, it matters. It truly matters. Conventional is really the only program where we can omit the debt under certain circumstances. But yeah, student loan debt is counted in mortgage qualification, even if there's no payment for the most part.
So the other thing I wanted Julie to talk about today was question or comment I get all the time is I'm working on my credit. I want to clean my credit. I want to do this and boost my score so that I can buy a house or my score dropped, and so I want to refinance, and so I need to do these things. And me knowing personally, like I had a conversation with Julie, I made some mistakes early on when I thought I was cleaning my credit by paying off a bunch of credit cards, and canceling them all. My credit score took a nosedive, and it took a while to recover. Because that's actually not the answer. So I usually tell my clients, no, before you start cleaning your credit, talk to a loan officer and get their advice and guidance first. Because usually as consumers, we don't know all of those considerations that go into calculating that and getting that approval, but they do. So seek help, ask the professional. So let's have Julie talk about what that looks like when you're trying to get your credit clean so that you can either buy a home or refinance.
So a lot of times people will have things out there they didn't even know about. A medical bill, maybe a bill for a cable company that they say you didn't return equipment, but you did, and paperwork was lost. So I always suggest try to get a soft pull on your credit, which we can do. It doesn't hurt your score, and then at least you can see what's there. Sometimes it's just a matter of disputing an account, but when you dispute an account, it doesn't go into your credit score. So you really have to watch how much you dispute, because underwriting guidelines, if there's so many accounts or so much dollar amount in dispute, that needs to be corrected and a true score reran. So don't go out and just dispute everything because you think it's going to improve your score. If there truly is an error, yes, dispute that account, it can be removed. If an account was truly paid or it was a medical bill you didn't know about, pay it. Ask them to delete it from your credit profile. Sometimes it's a matter of making a couple phone calls to get to that right person that will delete it, settle it, pay it in full, but try to get it deleted, because a paid collection versus an account that doesn't show obviously is going to make a big difference. Like Edna was saying, when you pay off your accounts, don't close a bunch of things out at one time. That actually triggers financial distress when you close those things out, even though you might just want to be cleaning up your credit and you don't want to use those cards. Maybe do 2 or 3 this month, and then maybe do 1 or 2 next month, but don't close them all. You have to use your credit. I always tell my people, get it down to 4 or 5 if you've got a lot of cards. Get it down to 4 or 5. Try to pay off the highest balances first, obviously. And then once those are paid, start paying down your balances on your existing accounts to under 50% of your credit limit. Use them. If you pay them off and you really want 0 balances, I always say buy groceries, put a tank of gas on there, and then turn around and pay it off. That's fine, because it shows that you're using your accounts. No credit, not good credit. And especially revolving accounts. If all you have is, let's say, student loans and a car payment, your score is not going to be as high as someone that has student loans, a car payment, and 2 revolving credit cards, because they really look at that fluctuating payment. If your student loans or your car payment is set every month or deferred, there's really no challenge in making that payment because you know what it is. They really look at revolving credit.
Gotcha. Okay, that makes sense, because my husband is in the process of helping my daughter build her credit, because when she graduates from school, all she will have is student debt. Now, he did take out a credit card, but his name is on there with her, and he does have a car that he put her name on there. So I don't know if those actually would count as well, since he's on there.
It'll show joint. If it's a joint account, that's different than an authorized user. An authorized user, the coding on the credit bureaus will pick up if it's joint or an authorized account. So if it's joint, it's definitely going to help her credit.
Okay.
As a matter of fact, my daughter, who has not the greatest credit, it's like, I love that you pay your credit card on time, Mom, because I have her on our account for when she was at school. So
yes,
it can help.
Yes, that actually was me. My mom put my name on her things, on her account when I was in college. In the event I needed to use it.
Right.
Fortunately, I don't think I did, but my mom is like, Miss, I'm going to pay, it's due on the 1st. I want to pay it on the 15th the month prior. That's my mom. So she's ahead of time, and her credit score has always been just immaculate. And that I do like, because it does help my credit score. But then by the same token, she's got a house, she's got a car, she's got credit cards.
So you got a lot of debt.
Yeah, because the other issue is that because our names Well, they used to be close, and then my mom remarried, so we don't no longer have the same last name. But before that, 'cause we had the same bank.
Oh, yeah.
So they would always pull all of her stuff from her account and show it on my credit. And I'm like, no, I don't have anything to do with that. That's hers. Like, I'm not on her car. But they always put it because it's in the same bank.
So similar, yeah.
And we had the same last name. And so I always ended up with, my stuff and her stuff. And I always got this thing on it that says, too much debt. I forget the verbiage, the legal verbiage that they use. It's 2 sentences just to say that you got too much debt in your name or affiliated with your name, because it's not necessarily mine. So.
Right. And that will happen with juniors and seniors or family members, father, son, maybe they just have a different middle initial. Or, maybe the dad's name is Matthew, but they name their son Matt,
Right.
after the dad. So that does happen. It can't be a good or a bad thing, unfortunately. Like you're saying, it just, comes up, I've got too much debt. But if they pay their bills and you've got minimal and you qualify, sometimes we leave it, honestly, just because it does help your situation. But when you're applying for things and you're a junior, always apply it as junior. Because a lot of times people won't tell me they're a junior,
Okay.
will do their application, their pay stub or W-2 might not show junior, but then all of a sudden I get their ID and they're a junior. So everything has to match, and now you're repulling credit. And sometimes that extra inquiry can make a difference of, just a few points on your credit score.
Gotcha.
Which is another thing that can lower your score. Is if you're just shopping for a mortgage, don't let 10 people pull your credit. 2 or 3 within a week, fine. But most every lender has the same rate, the same underwriting programs. It's just your level of comfort who you want to deal with. So just because Joe from ABC Bank said, no, you can't get a loan, and you try 10 other places and they all tell you the same thing, stop it. It's not going to help your credit score.
Yeah. Lucky number 17.
Exactly.
Let's try the 17th person out there.
And there are some people that, they'll shop for a car, and I've literally seen 25 credit inquiries. I'm like, why? Is it really worth it for 0.1% on your interest rate?
Wow.
For all of this credit inquiries, especially when you're going to buy a house.
Right. And that's the other thing too with people, that when you're in the process, and so I guess we'll talk about this, they're in the process, they have the pre-approval, and then we're working our way to closing, and then your loan officer says, Julie will tell you, don't make any large purchases, make sure you continue to pay everything on time. And then you decide that I'm going to skip paying, my Macy's bill this month, and I'm going to start shopping for furniture so I could put it in my new house.
Yep.
And or, now that my mortgage note is going to be less than what I was paying for rent, I got an extra $100 a month. I'm going to go get a new car that's more expensive.
Yes, I don't think people realize we do a soft pull on your credit before closing. So all of a sudden you've got a new credit inquiry. So then we're going to come back and say, oh, you've got a new GMAC inquiry. Did you get a new car? Well, yeah, but I can afford it. Well, now you're going back to underwriting because you have to qualify with that debt. It has to be documented. The same thing, like Edna was saying, you're looking for appliances, you're looking for furniture. Don't buy anything until after you close, because if you open those accounts, your loan goes back to underwriting. If there's too many inquiries, they can condition for a whole new credit report, which can affect your score. So it's always important. I always tell people, don't change jobs, don't put money in your bank account you can't document where it comes from. Don't open new debt. Don't co-sign for anybody, because a lot of people will say, well, I just co-signed, it's not my debt. But again, like we talked about, you're 100% liable for that debt. Mm-hmm. So those are some pretty big no-nos to do with your credit. Mm-hmm. And, I know we're on credit, but bank information too, people have money at home, not acceptable. Everything you do on your loan has to be documented. And they do follow up after the closing to make sure everything that we said is in the file or submitted to underwriting was really true. Example is, I had a parent give their son a large gift of money for closing because their home hasn't sold yet. He qualified with all the debt, that wasn't a problem. When we sold their loan, they actually called to verify that mom gave him that money. to make sure that there really wasn't something going on behind the scenes that we didn't document. So they do their due diligence. You know, they were pretty upset. Why are you questioning my mom? I'm like, well, we're not questioning your mom at all. It's quality control for the files. They're going to re-verify your employment the day of closing. So I always say, good news, bad news. I'll give you the news, but you need to talk to your loan officer or your lender and let them know what's going on. We're not here to judge. We're here to help, and we have to always be a step ahead.
Yeah, I did have a past client purchasing a home, and their mother actually was giving them money towards the down payment. The mother actually deposited, I don't know how much, and they did have the gift letter from the mother, and I don't know, but it was a large sum, like 20 grand or something. I don't know, but it was large. And the underwriter came back and says, well, where did your mother get this money from? The mother was very upset because then she had to justify and show where she got that money from to make sure that, because they do look for money laundering, and they also want to make sure that it's actually not a loan, that it is a gift. And so if somebody gives you a large sum of money, well, where'd they get it from? Did they borrow it from someone?
And now you're paying it.
Yeah, and then you're actually going to pay it back to the someone that they borrowed from, so that your parent now is just a middle person.
Right.
You know, and so the mother then had to turn over her financials, show 3 months of her bank statements and a whole bunch of other things, and they were not happy.
Yeah, people, I mean, they like and when they're trying to help someone, they don't want to disclose all their information. So it's always best to talk about all these things up front so you have a game plan on what you need to do. Even if it's 6 months from now when you think you're going to buy and you know you're going to need money from family, or you're getting a tax refund, or you're going to save in a separate account, it's best to talk about it so we can make sure that there's a game plan in place of how it's going to be documented.
I always recommend that if you're thinking about it, like she says, talk to your mortgage professional ahead of time, not when you're ready to do it,
Right.
but when you're even thinking about preparing, so that you know what has to go into that, because they do go back for some months and they look at your history to make sure that there isn't anything in it that's questionable, because again, we still have money laundering.
Yes.
Because the cannabis business is not federally recognized, and so they're still buying and selling homes with cannabis funds, which really most of us in our industry, we can't touch. So
Even if you work W-2 for a cannabis company, it's not considered income because it's not considered legal income. So, you know, and I know we're kind of jumping around a little bit talking about deposits, but the same thing with income. You know, not all income can be used. So you really need to know upfront what you truly can qualify for a mortgage, because even though you may have this other income coming in, it might not be recognized for underwriting purposes. So there's a lot of basis and a lot of things you should talk to your lender about in advance. I would say at least 90 days, if not longer than that.
So a question, going back to something you mentioned before, talking about cleaning the credit, what are your thoughts and feelings about credit repair companies? Because there are a lot out there, and they usually either 99 down or 199, and then they're like $99 a month that they put your stuff in dispute, and it does raise your credit score really fast.
Yeah.
While all that stuff is in dispute, however, from what I'm hearing from Julie, if you're trying to get a loan, then that stuff has to come out of dispute. So that credit score is not really a real credit score.
Correct.
It's temporary, what it could be. But if you have to take that stuff out of the dispute, then that actually becomes your real credit score. So the question is, what's the purpose and the point, and the amount of time that you want your credit to be in dispute? Because I'm thinking if you're looking to buy something anytime soon, it's probably not the best time to do it. If you have no plans to buy anything anytime soon, then maybe. But my mindset is always, if you have an extra $100 a month, that could actually be going towards paying down some of that debt. So that's just kind of my mindset. So your feelings and thoughts on that?
Well, credit repair can be good or bad. I mean, honestly, I haven't had a company that's had really great success with it. I've worked with a couple different ones. Like Edna says, they write letters, they put things in dispute for you. It takes time. Your score is artificially inflated. And typically, if you have over $2,000 of accounts in dispute, underwriting makes them be removed. The other thing I will talk about is, I don't want to say credit repair, but like credit counseling agencies that put everything in one payment. You pay them X amount of dollars a month and they pay your bills.
Consolidation.
Debt consolidation, there we go. I couldn't think of the word. It's great for some people, but I always warn, number one, when you do that, you have to be in that repayment plan for 12 months for mortgage purposes. But number two, so you may have, let's say 10 credit cards, your minimum payment on an average is $100 a month. Well, you're only giving them $800 a month. There isn't enough to make all those minimum payments. So they don't make the minimum payment, and now your account is delinquent, and it becomes delinquent. And I've seen this happen more times than you can count. You think you're doing the right thing, you have all the right intentions, you're led to believe we're going to consolidate all these bills, but the problem is they don't always communicate with your creditor. And they don't reduce your payment, or they don't accept a partial payment because they're just sending in money, and of course they're going to take it, but it's not your full payment. So if you're going to enter into something like that, make sure that the creditors you're paying are aware. Make sure that they're going to accept the payment you give them as full and not report your account delinquent. So that is a big thing with debt consolidation.
Wow, that I did not know.
Yeah, unfortunately, and I've seen people that had great credit but were just trying to get it under control. And unfortunately, it went 180 on them, and they were in a bad spot.
Wow. Note to self.
Yeah. And, if you can pay things on your own, if you have an account that's in collection, set up a payment arrangement on it. It won't show on your credit that you've paid it, but when the time comes for underwriting and they see this large bill, you can prove you've been making payments on it. You qualify with that payment, and at least you're trying to rectify the situation. Typically, you need 3 payments like that to show that you've been doing that in the agreement, but it's a way to help. And then eventually, it will drop off.
That's not a lot. Okay. So back to what we've said. You're thinking about buying a home, refinancing, talk to a professional first, like Julie, and get that head start so that when you're actually ready to do that, you're in a good place to do that. And then you're not scrambling at the last minute.
Right.
And or you're not disappointed when you do go to Julie and she says, well, you got a little work to do. It's going to take you some months. And you're thinking, I already did work, but you didn't do the work that was needed to be done. So there's a difference in that. Before we wrap up, any final words, anything that you think that a person should know?
Just, be diligent about your credit. Pay your bills, set your bills up on auto pay, check your credit periodically, because sometimes things pop up, especially with medical bills and utility bills, and all of a sudden you've got something you didn't even know about or isn't truly yours. And then you're scrambling to try to figure out where it came from, how you can resolve it. So you are entitled to a free credit report every year, the credit bureau, so do that and monitor your credit through your bank, like you said. I'll say Credit Karma, not that it's a mortgage score, but you can see if there's a big change in something you're getting, something's up. So check it out.
Okay. Well, thanks for the information.
No
It was
problem.
actually eye-opening. I love it because it gives me more tools now that I can give to my clients. So Experian Pro, that's
Experian Boost.
Experian Boost. That's the word for today.
Yeah, it's great.
Yeah, I can't wait. I'm gonna scream from the rooftops because that's actually great, because I'm really credit minded, because I had credit score that was once upon a time ago. Before I was a realtor, before I knew better, my credit score was sad. It was equivalent to an overweight person. That's pretty bad.
But look where you are now. Little homework and doing the right things. And it's not forever. I always tell people, don't be discouraged. It's not forever. You just got to get a game plan.
Yeah. Exactly, and then monitor it.
Right.
Monitor it. My mindset is always, if I don't have the money to pay it, then I don't need it unless it's an emergency. Other than that, I'm not charging it. If I can't pay that charge off, I'm not going to charge it. It's because that's just like a noose. So then when you get your paycheck, it's not your paycheck because it belongs to everybody you owe debt to. So
Very true.
Very mindful of that. So didn't know that then, I know that now.
Live and learn, as we say, right?
Absolutely. So we want to thank Julie again for her expert advice. It's always a pleasure talking with her. Every single time I learn something, just more tools to go in my tool belt to assist my clients, to give you all the information you need when you're looking to buy or sell a home. Thanks for joining. come back again. We will have Julie back because there's so much to talk about when it comes to mortgages and programs and do's and don'ts, more than you know. So, but thanks again.
You're welcome. Thanks for having me.
It's been a pleasure, and I'm just so excited that I'm seeing her face to face.
We got to meet.
I know, after I don't know how many years.
Lots of years. Yeah.
Prior to COVID, and I don't even know how many clients we've helped together, but
Quite a few.
it's been a lot. But it's been a pleasure because I know that they're always in good hands. So, and that's not fluff; it's just the truth.
Thank you.
You're welcome. And thanks again. See you next time.